So I'm sure many of you have noticed we have added another day to the quick start training with the introduction of the new core chart. So we're trying to restructure it and have a bit of a tighter structure and outline so it can be more uniform. So Wednesdays, we will be covering the core chart as much as we can, uh, just walking through the trade setups and how simple it is to identify the trade setups with the single panel of the chart. And we'll also answer any questions you guys have. So since there are quite a few of you today, usually I'd like to try to focus on the charts for about the first hour and then jump into questions. I am worried I may miss some, so if I do, don't worry, I will try to cruise back and make sure I get to them all if possible. All right, looks like. All right, excellent. So I think my computer will be running well enough, should have no interruptions in the class. So before we get started, a few things. Number one, I always like to cover is news. So as soon as my news window pops up here. On the Academy Day Trading website, yes, these are being recorded, so they haven't been, the recent ones, the last week, 2 weeks, haven't been posted yet. I will be able to get to that today. We were a bit hectic last week. But they should be all up if we get a second. Just bear with me, guys. Thank you for your patience. I do apologize if it runs a bit slow. I'll try to leave stuff on the screen a bit longer, as it looks like it's not 100% catching up with what I'm doing. So there we go. All right, so first and foremost, very important, is news. I like to check the news every day before the market opens, just so I can have a know when to sit out. We do sit out 5 minutes before and 5 minutes after any of these news events with a red, black, or green dot. So some days we'll have quite a bit of news. You can see tomorrow looks like there's a lot of news during the day. Not too much news today. We do have the petroleum status report, house price index, which was before most of the markets open. This may have affected C. And this note auction at 11:30, we're not really concerned about that, as it doesn't have one of our dots. So when we see this news event, we don't want to enter any new trades 5 minutes before or 5 minutes after that particular news event. So with the EIA petroleum status report, we really only consider this for the CL. And another kind of particular news case is we have this 9:45 and 10 a.m. news like we had yesterday. Now when this happens, so we wouldn't be entering into any new trades from 9:40 to 9:50. It's 5 minutes before, 5 minutes after, and then again from 9:55 to 10:05. So we have this short 5-minute window in between these two news events that we could look for new trades. And I'm of the opinion, why bother, is that we're still really in this news window. So I like to sit out for entire that extra 5 minutes. I just don't think it's worth trying to chase a trade in that little 5 minute window. Um, you still have the rest of the day. Sit out for 25 minutes before you can enter into any new trades. A lot of day left after that point, so something to be aware of. And the reason we sit out during news is we found a higher frequency of qualified trades that end up going against us during these news windows. So better to err on the side of caution and let the occasional winning trade that happens during news pass us by than enter into a lot more unqualified trades that just seem to have a higher frequency of going the other way. Oh, yeah, Jennifer's asking about 9:45 news. I was actually just referring to yesterday as an example. If we look at Tuesday, we had this 9:45 PMI manufacturing and the 10 a.m. existing home sales. So during this case, which again, we see that happening on Thursday as well. So something to be aware of is that news block does happen quite a bit. Matthew mentions that the markets have been a bit choppy today. Yeah, this week has seemed to be pretty slow, specifically the CL, which happens sometimes, and it really happens with any market. Um, they can go through slumps and periods of chop, and there's not much we can do except just try to look for clues that tell us we're in choppy market conditions. And as far as the previous training sessions go, those will be under resources and training room Q&A sessions. So the last couple of weeks should be updated later today. And also, I would like to point out, not the quick start guide, don't go there. But anyhow, the core rules have been added to the master rules. So if you own the core, if you own the core chart, the core rules will appear in the master rules section on Academy Day Trading. All right, so let's jump into some of these markets. It has been a bit slow today, all this week, and Jennifer mentions could be could be due to the new president, some policy changes, and all that stuff can affect the markets, especially the CL. I did hear that they're now starting the Keystone XL pipeline again, or there was an executive order signed, so that could definitely be affecting the CL market. And then if you noticed, when on Inauguration Day, the markets were NQ and YM were kind of choppy. And the day after, yesterday, all the markets had a really nice long run in there. So it may just be in a time where it's a bit trickier. All right, so some questions on the core charts. So we'll just try to cover it. These are the momentum arrows. So we do have these other indicators with Pro9 Elite, so these will still appear in your Pro9 Elite charts, but you will have additional indicators as well. So the goal of Pro9 Core is to wrap all that information displayed on all of the indicators into this section of the chart and make identifying the single T, continuation, and momentum extremely easy to where you can almost just do it at a glance rather than have to confer with several indicators. Although you may like that more. Uh, I personally do. I just like being able to anticipate a bit better with the blue line, and you have the additional trade setups you can spot with the Elite chart. But the core is very helpful, and as you can see, it makes identifying these trades very easy. And basically, the rules are if your bars are green and your background is green, that's a trade. So the momentum trade will have a momentum arrow signifying that that's the bar that we will enter on. So if we just scroll back a bit, and we see here everything's green, everything lines up long, and that's all we need. So, and it's really that simple. So there's not a ton to cover, but we'll try to go in depth as much as possible, especially for newer folks who aren't totally familiar with the money management strategy or things like that. So, and this is, I mean, this is just as simple as it is, and I really can't break it down any further because that's all it is. So, and a single T will look just like this, or a continuation. So this would be an example of a continuation that we would enter on the first color bar, because a continuation or single T, ideally, we want to enter on the turn bar. If we can't, we can also enter up to the first color bar. So, and this should answer your question, Robert. If you missed the first bar, no, we used, so let me fast forward here. So let's try to go over all these indicators. First, and arguably one of the most important indicators is our DPI over here, our Dynamic Price Index. So this lets us know at which price a new bar will be plotted. All right, my apologies. I think there's just a bit of lag. So right here on the very right side of the screen here are green and red numbers. Are the DPI, the Dynamic Price Index. I'm having, hold on one second. Jerry. Can I bring my chart screen down and to the left just a bit? We can't see the top side. I apologize, guys. Trying to just give me 1 second, everyone. Hey everyone, sorry about that. I do apologize for the delays. I'm going to try to get another computer up, hop on, and switch. Uh, so give me about 5, 10 minutes, and then we'll run a bit over. I know this is taking up some of the time of the class. Do apologize about that, but we're trying to get it. Just some unforeseen computer issues. So I do greatly appreciate your patience. We'll try to get this sorted out. So give me about 5, 10 minutes, and we should be good to go. Hello, everyone. Thank you for your patience again. Just, I see a few people wondering if the audio is dead. No, I'm just switching computers. This one just seems to be running very slowly, so I want to get to a new computer so we don't have this lag time. And so just about 5 minutes. Got my other computer. Just give me a couple more minutes and we'll be good to go. All right, thank you everyone for your patience. Just want to make sure everyone can hear me. We should be back on now. All right, excellent. Thank you guys. Thank you so much for your patience. I do apologize. Sometimes these newfangled computers just, you know, don't always cooperate. All right, excellent. So hopefully, exactly. Thank you. Rob says, call it a coffee break. If only there were coffee involved, huh? All right. So, I will cruise back and catch all your questions. I want to try to save those for the end, and I'll try to do an extra time if you guys can make it. Excellent. It will be recorded in case you can't stay for the whole thing. Again, do apologize for the delay. Thank you, everyone. Looks like we're on track now. So, maybe a slight screen lag, but it is better. Awesome. All right. So, the daily time, Rob, it should be 10 a.m. Pacific time. So, all right, back to what I was saying. We wanted to kind of run through these indicators. The DPI, our dynamic price index, I did confirm that the sound is broadcasting, so you may want to check your audio settings if you're having trouble hearing. And these recordings will be found at the Academy Day Trading website under the resources section, live training Q&A sessions. All right. So our DPI, our dynamic price index, are these green and red numbers that appear on the right side of the chart. You can see up here. Now this is our dynamic price index, and it's a extremely useful indicator, can give us a lot of information. Uh, Basically, it lets us know at which price needs to be reached to plot a new bar. So if you're heading in the direction of the trend, right now we're heading long. So if we hit the green DPI, we'll plot a green color bar. And if we hit the red DPI price, we will plot a turn bar. And basically, this is every 4 ticks. Every 4 ticks in the direction of the trend, we'll plot a color bar, and 22 ticks against the trend will plot a turn bar. So this DPI lets us recognize our entry price at a glance, and it also lets us anticipate some things before the market actually gets there, because we know either one of two things can happen. This can turn into a green bar, or it will turn into a turn bar. And if we're looking for it to plot a green bar to qualify our trade, we could put in our order ahead of time using a stop limit order if we are anticipating that the trade will be qualified by the close of this bar. And if it so happens that the market turns the other direction, we can simply cancel our order because it would never be filled. This is why it's very important to use stop limit orders. And I did see a few questions about why is the background not red over red bars. Well, now keep in mind that all of the indicators from the Pro9 Elite chart, all that information is being displayed here, but it's just not apparent to us because we're used to seeing the other indicators, but all that information is tied into the green background. Yes, this is the core chart. So, and that goes for the red background as well. So if you're not seeing a red background, it doesn't mean that something's wrong. It just means that the rules or the qualifications are not being met to display that particular colored background. So it's nothing wrong with the chart. That's just how it's programmed. Even though we can't see the other indicators that would clue us in for that, that information is here. So, and that's because we wanted to make it as simple as possible and not add any confusion. Because not every section with red bars is going to be qualified or is going to have qualified trades. And the same goes for green bars. All right, so I would like to remind everyone, I'll get to everyone's questions in a bit. Try to focus on some trade setups using these new charts. So, and basically, this is all it is. Is our background green? Yes. Are the bars green? Yes. For a continuation, we will want to enter, ideally, on the turn bar using the DPI that creates the turn bar. So in this case, it would be the green DPI. And that price would be 5129.75. That would be the DPI that created this turn bar here. Although we don't have a green background here, but we can also enter on the first color bar for trades such as the SingleT and continuation. So on this first color bar, we have our green background and we have our green bar, and that is a qualified entry. And that is just as simple as it is to qualify these trades. And we manage them the same as we would with the regular Pro9 rules. So a SingleT or continuation, we enter with 3 contracts, a 6-tick, 8-tick profit target, and a 22-tick initial stop. After the trade moves 4 ticks in our favor, or after the next color bar plots, we'll adjust our stop from 18 to 22 ticks. Since the trade has moved halfway to our profit target, we'll adjust our stop up the same amount to help mitigate some loss should the trade turn against us from here. But we only need 4 more ticks to reach our profit target. And at the close of the next color bar, that will have been 8 ticks from our entry, we'll sell off 2 contracts for our 8-tick profit target and adjust the stop on our runner to break even, which is the same as our entry price. And from here, eventually we'll institute a trailing stop if we get to that point. But in the example of this trade, if we had entered right here, this tail would not have come down near far enough to hit our stop. It looks like it's probably 6 or 8 ticks or so. 51, 30, 75. So, or about 13 ticks, it seems. So, not near enough because we'd have a 22 tick stop before this bar closed and then an 18 tick stop here. But once we reach our profit target and our runner is at break even, we're not going to adjust it until the close of the 4th bar from our entry bar. And the entry price for this particular trade would have been 5130.75. That is the green DPI that created this first color bar, which is our entry price. So in this case, after we hit profit and our runner was adjusted to break even, we get this long tail here, which would stop that out. So the trade would have hit profit target, but get stopped out right afterwards. Since we're on this long trend, we would have triggered a momentum arrow, and this is another trade entry. Our background is green, our bars are green, and we have a momentum arrow. And that's as simple as it is. And this is including all of the information from the other indicators, like the blue line, direction, super trend, dynamic price, all that, or super trend and direction. And our momentum trades, we enter with 3 contracts. Again, all of our trades follow the same basic money management strategy, a few with different profit targets and initial stops. But we always follow the pattern. We always follow the pattern of 3 contracts, sell 2 at your profit target, and adjust the stop on the runner to break even. So if initially you may not want to start with 3 contracts, you can start with 2. And you would follow the same pattern, just selling 1 when it reaches your profit target and removing the second, or adjusting the second one to break even and managing it the same. So this would be a momentum trade, and I did see someone ask if it is possible to get in a bit early. I think so, and if I see a green arrow, and because the way the background plots on bar close, but I know we're on a long trend, and for instance, if the background is green here, I don't know the background's green here yet, but I mean, I would probably enter that DPI the same, and just enter it early before the bar plots. There will be rare times, as in this case, where the green background didn't actually plot. And that's likely because if we would think about the other chart, the blue line dipped in below the histogram and then popped back out again on the next bar. Or we can always attempt retracement entries. And if we know our entry price ahead of time, that can be a lot easier if we're ready to go in the dome. And our momentum trades, these ones are a bit different they must be entered on the same bar. So if we have a momentum trade trigger here and the next bar closes, now we can still enter using the same entry price. It doesn't literally mean that the trade has to be entered on that bar or before the next bar starts or anything like that. Whenever we say we have to enter on this bar, we're really talking about the particular entry price, which is the DPI that needs to be reached to plot that bar. As our entry price is always going to be a DPI price. We're never going to hop in at the open of a bar or the middle of a bar or the low of a bar. We always use our DPI price. And this is so we can easily tell what it is at a glance. And also it gives us the advantage of waiting for the market to come to our entry price and prove that it's going to move in our direction, or it's more likely to move in our direction and at least carry us to profit target. So in the case of our momentum trade, again, we enter with 3 contracts. For this trade setup, we look for a 6-tick profit target and a 15-tick initial stop, but we'll manage it in much the same way. This time, after we reach 4 ticks in our favor, I'm not a fan of adjusting it up 4 ticks or adjusting our stop up 4 ticks. I know some people like to. I like to have that extra wiggle room in case we do run into a situation where we get a double tail or back-to-back tails. Sometimes it's just going to stop us out and there's nothing we can do. But sometimes the tail comes and it's just a head fake and it's 10, 11, 12 ticks. So if we leave our 15-tick stop in place until we hit our profit target, we can have a better chance of riding over those wicks that don't quite reach our stop. And they do happen occasionally, but not too frequently. So after the close of our next bar from our entry bar, that's again 4 ticks. So we're more than halfway to our profit target. And we need 2 more ticks. So our profit target will be hit somewhere before this bar closes. And we want to do the same thing, sell off 2 of our contracts at our profit target and adjust the stop on our runner to break even. And with the momentum trades, a few things can happen depending on how fast the market is moving or how strong the trend is. Since we hit our profit target in the middle of a bar and adjust our stop to apologize about that, got distracted by a question. All right, we adjust our stop to break even, and this is a great question. Why do we adjust to break even instead of break even plus a tick? Just so we can have a little bit extra wiggle room before we start trailing at the low of the previous bar. So we want to have the opportunity to catch a runner and also not lose any money on that particular contract. So we want to have an opportunity to catch a runner without any further risk after we reach our profit target. And that's really, I think, the strength of the money management strategy is being able to extract our initial profit from the market and then still have a chance to catch a runner. And you may want to experiment. Break even plus a tick, break even minus a tick may work better for you. All right, and then, yeah, and we leave it initially Excuse me 1 second, guys. All right, and we initially leave it at break even. Not for long. We're going to leave it there until the fourth bar from our entry bar plots. So we'll be at break even, and there is a chance that it does get stopped out at break even. And that's okay, it's going to happen. Just because we have that contract in there doesn't mean that it's going to continue moving. But we're never going to catch a runner if we don't have that contract in there. After the close of the fourth bar from our entry bar, that is when we begin trailing at the low of the previous bar. And you'll see these numbers above and below the bar. Usually they're yellow. They should be yellow on your chart, I imagine. This will tell you the high and low of the previous bar or most recently completed bar. So once the fourth bar from our entry closes, we will adjust the stop on our runner to the low of the previous bar. And as each new bar plots, we will just adjust to the low of this bar. And once the sixth bar from our entry bar plots, we have the option of widening to the red DPI. And this will basically be the opposite DPI of whatever direction you're heading in. Because you couldn't actually put a stop at the green DPI because it's ahead of the market. So you would have to use the red DPI. And this does widen our stop a bit from where it was, but it does have its benefits of letting us ride over any other tails that may appear on the run and stop us out. So if we follow the example of widening to the DPI, in this case, which is probably one of the drawbacks, but I don't mind it that much. So we widen it to the DPI, and the next bar is a turn bar, so we get stopped out. That's going to happen sometimes. So if we were trailing at the low of the previous bar here, we would have had a couple more ticks rather than widening it to the red DPI. But if we picture a run like this, just as an example, and I just do this to demonstrate the difference between these two trailing methods. Some people like to trail at the low of the previous bar for as long as they can. And that has its benefits and also its drawbacks as well. So we'll just walk through this as an example. So if we were trailing a run like this at the low of the previous bar, we do secure our potential ticks, more potential ticks initially. So in this case, imagine we're trailing at the low. Zip back here. So as each new bar plots, we're just going to adjust to the low, right? We're on bar 10 at the right of the chart. And as each new bar plots, so now we're going to adjust our stop to 51.11. As the next bar plots to 51.12. And you'll notice it moves up 4 ticks. Remember we were talking about our DPI moving up 4 ticks. So unless there is a tail, the low of the bar should move up in 4 tick increments. And then we hit a tail here. And now this does pass the low of the previous bar, so it would stop us out. Now we do have a momentum entry here, which is the great thing about momentum entries, because if we choose to use this trailing stop strategy, we can often jump back in on the same bar that stopped us out. And that's well and fine. That works out well for a lot of people. And then again, we hit our profit target, adjust our stop to the adjust the stop on our runner to break even. And then again, we begin trailing at the low of the previous bar. And this tail doesn't look like it came down far enough to stop us out, but that will happen eventually. It'll be the same type of situation here. So eventually you're going to just get stopped out and keep hopping in this momentum trades, which can work out well a large percentage of the time. But there are a few things we do have to worry about, is that eventually the run is just going to run out of steam. We know trends can't go on forever. Eventually they have to end, whether it's for a short period of time or a short price reversal, and then it may continue on the trend, or it could just reverse altogether. But it's going to happen, and we don't really have a way to determine when that is. So eventually you're going to run into a situation like this, where we enter in on a momentum arrow, and we've already taken part in a good portion of the run, let's say, and gotten quite a bit of profit. But now we're going to enter on this momentum arrow, and the next one is going to stop us out. Or the next one could be a turn bar, as that does happen sometimes. And there's no surefire way to determine when that's going to be. If we could just predict when a turn bar is, we'd be entering quite a bit of different trades. So now that was an example of what the run would look like trailing at the low of the previous bar. Now if we imagine widening to the DPI, say we got in somewhere over here, doesn't necessarily matter for the purposes of the example, but at the close of bar 9, let's say we widen to the red DPI, 5107.25. And as each new bar plots, we're just going to adjust to the new red DPI, which you'll notice will be 4 ticks from the previous one. And we keep doing this, and using the red DPI, if you remember what we covered with the DPI earlier, since we're heading long, we know if the red DPI is hit, it's going to plot a turn bar. So I know, using the DPI as my stop, the only thing that is going to take me out of this run is a turn bar, because my stop is going to be 22 ticks. So any tail, unless it hits 22 ticks and plots a turn bar, not going to stop me out, which is what I like about it. I think it's a lot easier and simpler to manage this way. As each new bar plots, you're basically just going to move your stop up 4 ticks. Right over this tail, don't have to worry about getting stopped out, hopping back in, and you just keep adjusting your stop. We'll ride over any other tails. These tails could be 18, 19 ticks, wouldn't matter. Again, here, even right over this tail, and you just get stopped out by this turn bar. So you can see each one has their pros and cons, and ultimately it's up to each of us to decide which style we like better. But you just have to know or be prepared for what can happen with, trailing at the low of the previous bar. We know that runs are going to run out of steam. So eventually, and especially when there's multiple runs, usually after the third leg or wave, they tend to run out of steam for a bit. Robert has a question: if these charts are designed to replace the current charts? No, they're just designed to make things simpler if you want that. So they're not necessary, although all the information is contained in this panel. So you're not missing any information, it's just not visible to you. So with the full elite charts, which we'll cover tomorrow and Friday, you can spot a few more trade setups, like the dot trend, breakout, and divergence reversal. Just 1 second here, everyone. All right, everyone. I'm going to go back and start covering some questions, and then we can take a look at some other trade setups and money management strategy if you guys want to. All right, so yeah, and so this chart was an add-on since it's not necessary to enter any Pro9 trades, but it is useful for people who either want to make it simpler and identify. You can see how just really at a glance that you can qualify these trades. Um, so, and I did cover that a bit, but I would like to just go over this again. Just as with the regular Pro9 chart, we're not always going to see a red background over red bars, right? Just because there's red bars doesn't mean there's a qualified trade here. So if you're not seeing a red background over your red bars, that's because the indicators are telling you that that's not where the trend is going, so there's not going to be a qualified trade in there anyhow. David mentioned the wicks need to be black. There is a you can just pull the regular Pro9 Core. I think this is the white version. We added just a white version that is easier to see for some members. I know the contrast against the black background can sometimes be difficult to see for others. So here's the same chart just without the white background. Just depends which one you prefer. So yeah, and all the information is in here. I see a question about the 200. So the DPI number will actually turn yellow if you are too close to the 200. So if your entry price is within 9 ticks of the 200, it will turn yellow, letting you know not to enter the trade, because the 200 can always be a strong point of support or resistance. So we don't enter a trade heading into the 200 unless we have enough room to hit our profit target. So, and the DPI takes care of that for you by turning yellow. And also, if we see a yellow turn bar, we know not to enter into the trade also, as that's telling us another one of our rules is not qualified. Gary is asking, do we still support the dot trend trade? Yes, that is supported, although it can't be identified from this chart. So this chart is just for a streamlined and simplified way to spot basically our bread and butter trades, which would be our SingleT and continuation, and also the momentum, as it is one of the trades that appears most frequently, whereas the dot trend can be quite infrequent, usually maybe 5 times a month on average in a given market, although it is a very strong trade. And we'll cover those tomorrow when we go over the full chart as well. I do see some questions about the debriefs. We basically release those just as additional training tools. so that anyone can match against all the qualified trades that happen in a given market during the day. So they do take quite a bit of time to produce, so we just can't do one for every market, although we would like to and may be able to in the future. So we do try to rotate through the 5 markets we watch. So you can match against the qualified trades, and we do add some commentary on them. So we'll let you know if, this one, the market may have moved too fast and maybe not have been able to enter, but it's still a qualified trade. So that's really the goal of those, is to display all qualified trades in a given market. I see a question about the KISS trade, which is really not included in the Pro9 rules. So Todd may have gone over it in some advanced training in the class, but we don't really teach that in the training because it's not included in our trade setups. A question from Mo: can we use an ATM strategy to manage the stops? Yes, definitely. And I mean, if able to, I would recommend that. I think it's extremely helpful. It just manages the trade for you. We have a few videos on our website. We'll probably be updating those soon, going over the ATM strategy, which stands for Automated Trade Management. You can have that in the DOM. So once you put in your stop limit order, and once the order is filled, it will manage however you program it. So we have that outlined, how to mimic our money management strategy as close as we've been able to get it with NinjaTrader's ATM function. So it can't manage the trailing stop exactly how we would like, where in our example we trail at the high or low of the previous bar and then widen to the DPI. It can't do that. So you kind of have to pick either or. You can do an approximation of widening to the DPI, or you can set it up to trail at the high or low of the previous bar the entire way. Or you can have the ATM manage the trade up until the runner gets to break even after it sells your 2 contracts for profit, and then you can trail the runner yourself manually, which I think is, if you want to follow the money management strategy exactly, that's probably the way to go. But there are a few different options you have, and you can always experiment. You may find a trailing stop strategy that works better for you and your profit goals for the day. So Ronald asks if there is an option to have the old EMA background color, which just works off the EMAs. I'll have to check and see if that's an option for you. I'm not sure. Asking about the background color. Yeah, that issue was resolved in this, and there should be a new update for Pro9. A few minor things needed adjustment as well. I know some people were having issues with the background color updating all the time, but that has been corrected. So, and in particular with the Pro9 Core. Mohammed is asking if the momentum trade requires colored background. Yes. So all the trades you identify on this chart will need a colored background color in the appropriate direction. And I'm pretty sure you'll never see a green background over red bars anyhow, or vice versa. Someone asking specifically, what does the yellow turn bar signify? That's basically letting us know that the super trend rule was not qualified. So I did have a question from Kirby to take a look at the CL or TF today. Let me see if I can get these charts up here. I had to switch computers, so this isn't exactly set up how I would like. There we go. All right, so taking a look at the CL today, it was pretty choppy. So, and it seems to have been that way for a couple of days this week. Uh, and it's going to happen sometimes. So unfortunately, there are some trades that go against us. We do have a single T here. This one right here at 950, unfortunately goes against us. And then this happens in the news window, so we wouldn't be able to enter that one. So sometimes we do get a bit of chop. With these charts, it's a bit harder to definitively tell when we're in a sideways market, but generally when we have a lot of turn bars back and forth, that's a good sign if more than 50% of the bars over a period of time are turn bars. That's telling you there's a lot of indecision and just bouncing back and forth. So maybe a good sign to kind of just watch that market for a minute and see if it straightens out and we get some better trends. All right, a question from ML. What are the 5 markets we watch? With Pro9, we look at CL, it's crude light, TF, which is the Russell, YM, which is the Dow, NQ, which is the NASDAQ, and EMD, which is the S&P Midcap 400. Now, Pro9 will work with many different markets, so I know some members like gold, some of the other precious metal markets as well. Soybeans is one I've heard does well. Also, some European markets, the FDAX or 60 or something like that. I've even heard some members trade the Tokyo sessions. I haven't looked into that myself, but so there are a ton of markets out there that work. These are the 5 we've watched with the system and are familiar with and its performance. So if you're venturing into a new market, would recommend checking it out on Sim for a couple days, see if it has enough volume and price movement to provide some enough trade setups to make it worth watching over time. Question from Ron. Does or will your service include what would be the best instrument to trade for that day? No, we really can't provide that service because no one can know that ahead of time. We don't know that ahead of time. So there wouldn't really be a way for us to do that or provide that service. I know some people do have difficulty deciding on which market if they're only looking at one market, but a few ways you can go is watch a couple of them in the morning and go with the first one that produces a qualified trade. And there's, you can shuffle the charts around and minimize them, and there's enough room to have 2 or 3 charts up on one screen. As we don't necessarily need the full chart to tell if there's a qualified trade coming up. So, and ultimately, we can't really tell anyone what market to trade anyhow. And ML talking about the background colors. All right, go ahead and shoot an email to support, and we'll see if we have the update for you to get that fixed. Having a question about heating oil. I actually don't think I even have data for that on this computer, so I had to switch. Computers mid-broadcast. All right, and what's the symbol for Tokyo? I'm not sure. You can check. You can search for any market, and if you go to the Control Center, Tools, Instrument Manager, and here we can search for any market. So even if you don't know the abbreviation for the market, you can just type in a description, and I just typed in Nikkei market. So here you can see all the abbreviations for those futures. And you can do that for any market. Kirby's asking if we can show a bean chart. If I can get my computer up, I'd be more than happy to do that tomorrow. But I don't have all that data or any of that set up on this computer. So if you want to pop in tomorrow, I'd be more than happy to check out a few different markets. Brian asking for the 5 markets again. That would be the CL, TF, the NQ, YM, and the EMD. Pat is asking the question about if we're sending this out. It was an add-on available for purchase, since it's not necessary to trade Pro9 Trader rather than an additional tool if you're interested in that. Mohammed, can I show an example of a limit in trade that gets qualified after the bar plot with the entry price, please? If one pops up, we could look at one. Kirby's asking about the TF. Is $1.50 or $100 now? It is $50 now, so it's $5 a tick. So if you haven't updated that in your NinjaTrader, you may want to do that. It does not, as far as I know, it doesn't update automatically. Not sure what you're asking there, Kirby, so need to do 6 for Pro9. Joe D is mentioning the EMD is often very thin, wider bid ask than others. Sometimes trades right through me without allowing for extra tick on entry. Sometimes, yeah, I have heard that. It doesn't have as much volume, So there is a tendency to catch a bit more slippage than usual. And as far as slippage goes, if you find that it slips a tick or two on your entry price, we just adjust our profit target accordingly. So we would consider it uh, the 8 ticks from our original entry price. So we still want to look for the same profit target. Mohammed, go ahead and shoot an email to support@academydaytrading.com. And then Kirby, if you could clarify a little bit, I'm not sure what you mean by that. So need to do 6 for Pro9. Not sure. And hold on a second, guys. I apologize. All right. Now we're back. Sorry about that, guys. I had to go grab a drink of water. So I was referring to this question. At the end of our trading day, is there somewhere we can go in Ninja to review the trades taken, both winners and losers? You can come to this Account Performance tab, put in your date ranges, and hit Generate, and it will give you all the information of trades entered between those dates. You can see individual trades, the summary, all that, or you can come to orders and executions. These will all orders placed, all the actual executed orders, all available there on NinjaTrader. So Joe D has an excellent question. What to do when first target is touched but we are not filled? My ATM will move all contract stops to entry price. And that's actually fine. That's really what you want, and we recommend that method if you're doing it manually, where even before we sell our two contracts at our profit target, we want to adjust all of our stops to break even. So sometimes the ATM doesn't always trigger if it just kind of touches your price very briefly. And there's not much we can do about that. But adjusting to break even does protect us in case the market kind of just whipsaws back. And Joe K asking about the yellow turn bar and how it differs from the white turn bar. The yellow turn bar basically lets us know that the super trend rule is not qualified. So we would not enter a trade with a yellow turn bar. Matthew asking if there is a way to backtest Pro9. You can definitely load up some market replay and run, but to do any backtesting in NinjaTrader, it does require a trading strategy, and there is not one in Pro9 as of yet. There may be one released in the future. All right. Does anyone have any more questions on the trade setups themselves? There wasn't a ton. I know Kirby was asking about the TF. Let's see if my TF chart is up. I don't think it is. We'll see if that data loads. Jeff is asking about the divergence reversal. We're trying to save those for tomorrow, but I can answer that briefly. On the divergence trade, we're looking for the price bars. Oh, that's why. Thank you, Michael. I don't know why that is set to the old contract date. All right, and back to Jeff's question. Let's see if this switches here. All right, just give that a second to load. On divergence trade, we look for price bars plotting opposite of direction line. Does it have to be the opposite or just not the same direction? For instance, price is going up, but blue line going sideways. Is that considered qualified? Really, you'll want to check the numbers on the blue line. They will start counting in sequence when they are moving opposite from the price bars. So even if it looks sideways, it is considering so even if it appears it's going sideways, somehow this tried to load both contract dates. Let me just open up a fresh chart. Give me a second here, guys. We'll get this TF up one way or another. There we go. All right, Jeff, sorry about that. So even if the blue line appears that it's moving sideways, if the numbers are counting sequentially, trust the indicator because it does consider extra values that aren't always displayed in the data box. So it may be slightly diverging, even though it doesn't look like it is. So that's the way to tell for sure. Andy G asking any projected date for switch to NinjaTrader 8. Not just yet. Should be Actually, I just have to check because I don't want to put out a date range there and then, have people expecting it to come out and be. Uh, so we are working on it. It's pretty close. We just want to go over it with a fine-tooth comb, make sure that uh, no small things slip past us. So we just have to release an update a week later or something like that. So we are working on it, and it's very close to being done. Uh, Robert G mentions. Haven't seen many yellow turn bars for the past 5 days, and that's entirely possible. They aren't extremely common, but you should still see some. Um, but I would just check a few different charts to make sure they're popping up. But there shouldn't be any reason that all right, go ahead and shoot an email to support, Robert, and I'll probably have to get with you later this afternoon and see if we can figure that out if you're not getting the yellow turn bars. I will have to check on the audible alerts for you, Joe. Mohammed is asking, do we enter into new trades while the previous one is still on? You can definitely do that. That is completely up to you. Um, so we don't really have a rule for it as far as yes or no. That just depends on each individual trader's risk tolerance. And if you're okay with entering or stacking trades, uh, totally up to you. So you just want to follow the uh, same money management strategy for each trade. So if you're on the same market, just make sure you keep track of your entries and exits and stops in the dome. Matthew's asking about the slowdown. Yeah, go ahead and shoot me an email to support. And Kirby's asking about the TF, the only trade. I see this one at 11:04, and this one as well. That one, not quite a news either. So a bit choppy today, slow, or a bit slower than usual. Um, yes, today's broadcast is being recorded, and it will be updated after all 3 classes are done this week. Ray hopped in late. Quickly, we'll go over the yellow turn bars. The yellow turn bars basically tell us that the super trend rule is not qualified, and that's it. So if you see a yellow turn bar in what would otherwise appear to be a qualified trade, it is actually not a qualified trade. That's all right, Mohammed. If you have more questions, you can always shoot an email to support@academydaytrading.com, and we'll try to get you squared away and answer all your questions. And Jeff is asking, when will videos appear online? I'll have the most recent ones updated after today. All right, everyone. We did go a bit over because we had a bit of a late start. And real quick for Joe K asking for a qualified single T. What does that look like on these charts? Let me. So, well, this is a qualified continuation. The continuation and single T are very similar. The major difference is that the continuation will have more bars in between these turn bars. So a continuation would be turn bar, color bar, turn bar, or turn bar, turn bar. And a single T will have more bars in between here, letting you know that the reversal or the price reversal has gone on long enough that it can be considered a start of a separate run, or it'll be a single T, single turn bar trade. Stephen Martin asking about the background color was previously dependent on the 10, 20, and 50 for the core. Does it distinguish when the 200 is aligned for single T? Yes. All that is programmed into the indicators so that it only identifies the trades when they are qualified. All right, everyone. Thank you for joining me. Thank you for your patience this morning through those technical difficulties. If you asked a question, I missed it. There were a lot of people in here today, so I may have missed some of the questions. Go ahead and shoot an email to support@academydaytrading.com. We'll try to get to it, and I do see a few of you in there, and I know you have emails in there. We'll be getting to those later today. Jeff, I did see yours. All right, glad everyone enjoyed it. I hope you guys learned something about our new core charts. And hope to see you in class tomorrow, where we'll cover the full suite of indicators and how we can use that to identify a few more trade setups, as well as anticipate some trades and try to get in as far ahead of time as possible. Again, thank you guys for joining me. I hope the rest of your day goes excellent, and hopefully we'll see you in class tomorrow.